Hey everybody, my name is Scott Harkey and I'm going to be your host today. I also will figure out how to work my mute button after about 30 seconds. We've got a great set of panelists today, so I'm going to go around and let each person introduce themselves. Elena, I'm going to start with you and then we'll go Ben and Dan, and if you could just give a quick intro and then we'll jump into some questions.
Great, thanks Scott. Hi everyone, afternoon. My name's Elena Whisler. I am Senior Vice President at the Clearinghouse. Representing our customer relationship management team. Infrastructure products such as ACH, wires, and the RTP network. So I'm excited to be here, Scott.
Thanks. Just to give you the heads up, you cut out there for a couple of seconds,
Okay.
But we got the first part and the end part and the important part that you're at the Clearinghouse. So we'll roll with that for now. Ben, you want to jump in and go next?
Yeah, thank you, Scott, and thanks for having me here today. I appreciate it. So good afternoon, Ben Schmitt. I'm the VP of Product at Dwolla, which encompasses what we discover and what we deliver related to our platform, how we integrate, how we advance, how we move money. And in doing so, my background's primarily both in technology and information security. So looking forward to the discussion today, and thanks for moderating, Scott.
Absolutely. And then Dan.
Thanks, Scott. Dan Baum, Senior Vice President with the Federal Reserve, and I'm working on the new FedNow service that we've been announcing in the industry over the last couple of weeks. Long history with the ACH application, but really looking forward to the discussion today.
Cool deal. And just a little bit of background on myself real quick. So I work at a consulting firm called Levvel, where we do a lot of work on integrating a lot of the systems that you guys represent or are part of, but also come from the banking world. So a lot of my focus comes from that perspective over the last 15 or 20 years. So with that, we'll go ahead and jump into some questions. So, one of the first things that we want to talk about, and it's kind of hard to ignore just given the environment and the fact that we're all virtual when we were planning to be there physically, is the result of COVID, not only in kind of our personal lives, but also in our businesses and our organizations and how we go about interacting with our customers. So one of the first things I wanted to ask was just for each of you, if you could give a little bit of your perspective on how the COVID and the kind of implications of it over the last 6 to 9 months has really impacted your organization's plan for adopting new technology, product or offerings. Have you seen it accelerate? Have you seen it, cause pause? Have you had to reassess like what you're looking at and maybe what product roadmaps look like? But just a little bit of insight into how it's shaping kind of your organization and your approach. And again, Elena, I'm going to start with you this time. I won't do it every time, but I'm going to go back and start with you again.
That's all right. I'll just make sure the sun doesn't get in my face that much. So great question, and I'll take it from two lenses. So from an internal clearinghouse perspective, we continue with the initiatives that we had planned. So it hasn't really impacted anything internally within our organizations on, either modifying, making any change control requests to our existing applications. We've done a good job of seamlessly moving to a remote environment, making sure that we are still, running the payments infrastructure for financial institutions and haven't seen an issue there. The one thing I'll say, being able, and I'm sure Dan similarly, being able to see how financial institutions are processing ACH transactions, check RTP transactions, we have seen a dramatic shift, as you can imagine. So March, April check volume tanked, to be very honest, declined, as you can all imagine. And then now we're starting to see that recovery go back up, not necessarily to pre-COVID days, but starting to show that incremental increase. ACH, it continues strong, to be honest. And wire transactions did also go down, mainly because of trade issues and things stopping. The one thing I'll mention of interest is, with the push towards digitalization, the push towards making things contactless and real time and getting money where it needs to go during these times, we have seen an increase in our real-time payment transactions, as well as an increase in the adoption of financial institutions coming onto the network. which could be correlation, causation, could be a lot of different things, but we have seen that. And so we continue to see that particularly in the electronic components of our processing, for sure.
Cool. Yeah, that makes a lot of sense. Ben, what about from your perspective, from the Dwolla perspective?
I would echo a lot of what Elena says, but I'll go into a couple more areas that we're seeing. Similar to the indicators Elena mentioned, we definitely saw from an overall volume some changes, but we're seeing that, quite frankly, nicely recover. You mentioned ACH being strong. I echo that, Elena. But we are seeing interest in continued movement of funds to be faster into, across, and out of the Dwolla platform. Push to debit was one that we brought to the table, and we're seeing interest in that, right? Because getting funds more quickly is super important, whether it be gig economy or contactless, and wanting to move the funds more quickly. I would say this shift that we're seeing really from the pandemic kind of pushing us, I don't think it's temporary. I think it's a permanent shift to moving funds faster and in a safe way. So the way we look at business and consumer behavior in that lens is that real time is really no longer a luxury. It's going to be table stakes. And so that's what we're planning for roadmap wise, to make sure we can deliver that as another option on our platform.
Makes sense. Dan, you're in a bit unique position of obviously you've got lots of history as an organization with money movement in all forms, but as it comes specifically to real-time payments, and that it's kind of still early in the game for you guys. How are you thinking about it, and how has this kind of trend accelerated, previous thoughts or otherwise shaped your thinking?
Yeah, maybe Scott, I'll do a similar thing to Elena and look at it from two lenses. We've internally had to learn quickly how to be digital, and I think it kind of gets to Ben's point. With all of us on the adapting and being together like this today, we've all quickly, and all of the consumers that bank with banks that eventually use these services are learning quickly how to become digital and touchless, which will eventually take the friction out. As we're learning that, we as an organization have found new ways to work quickly and efficiently. And the FedNow service remains one of the highest priorities in the Fed universe. And I would tell you that we haven't missed a beat. We're right on schedule and moving as quickly as we can to get to the policy objectives we want. So the pandemic in that way has forced us to rethink and maybe learn some lessons about being digital, but not change our model or our timeline. I would then maybe the other lens echo what Ben and Elena said. I mentioned this digital notion. I think we're actively talking to all the financial institutions and frankly other ecosystem industry players that we can, and that is the one common theme that has come. One thing I may add that's a little different is, in our position, we also talk to the Treasury, and clearly they do a lot of disbursements at times like these, famously one not so long ago. And it would be really advantageous to look forward to the lack of friction that a real-time payment digital transaction could add to that kind of offering that the Treasury may look for future disbursements.
So how much do you wish you had your system like now, right? Instead of like being at the stage you're at?
I think that goes without saying, right? We'd like to have that whether we have the situation or not. But yeah, I think given the time, the iron's hot, and it would have been nice to have been able to strike while it was hot. Yeah.
Right. So if we stay on that theme for a second, a lot of the work we do is working with banks of all sizes to implement things like the RTP rail, or to think about FedNow, or to work with Dwolla. A lot of what we hear from financial institutions is kind of the decision point around how they move forward with real-time payments. And some of that comes down to, TCH has RTP in the market today. There are other third-party services that they could use to connect to that, and that maybe offer ability to connect to other systems in the future. They know about FedNow, they're planning for that, and they're trying to figure out what to do. How do you, I'll start with you, Dan, how do you advise organizations, financial institutions, to think about that decision, right? And more specifically, part of what they're trying to work through is, do we go ahead and build into RTP? Do we leverage someone like Dwolla and use that as a conduit? Do we wait for FedNow and jump on that? again, I imagine that you have a certain objective you're biased towards to some degree, and that you represent an institution with a product and you want them to use that product. But more from like a thought perspective, how do you think about that decision?
Yeah, I think I'd start by saying that, we generally like to baseline ourselves with the policy objective of broad reach for real-time or instant payments. And by doing so, we think that getting the ecosystem generally connected to one of the solutions, so that we can facilitate the movement of money in real time more efficiently and without the friction I talked about earlier. I think that's kind of the goal we're actively trying to seek. You're right, we will be launching a service that we want to have in the marketplace. And in that space, when we're talking to FIs, we advise them, we're taking the position of, here's everything, all the information we have on our service, and then position that side by side with the other services and allow them to make the best decision for them. Again, the policy objective will be best reached when we get to that connectivity and get them all participating. I think in the short run, we could slow that process by focusing first on competition and second on reach. So we're leaning into the reach dynamic as much as we can.
Cool. And Ben, how about you guys as a kind of third party to both systems? How do you view that when talking to financial institutions or others?
I think we think about it a couple of ways. So one is, do we help shrink the time to market? That's a really important business decision. Each bank will have relative pros and cons to that. They have a vision, and your roadmap is kind of aligned with that vision, right? And so where does it fit in there? And last is talking to your customers, your businesses and your customers. So doing that, you're going to have a pretty good use case or set of use cases to accelerate digital banking, getting users online, et cetera. I think there's a couple other factors. If you want to be 24/7 by 365, this is one of the answers to that question, going real time. So I think that's an important one. And meeting your customers where they are, when they are. So this kind of checks a lot of those boxes. So what does that really mean? I think finding a third-party service provider is one of those answers. They're going to understand your banking core. They're going to understand your customers. And this problem is somewhat solved. They've done this before. The clearinghouse has been around with RTP since 2017. So bringing things to market faster, they've done it, and they can serve even like as a funding agent to provide additional value to you. So one of the names that comes to mind, FIS, had a release recently about this, helping small to mid-sized banks and credit unions provide access to RTP. So I would find one of those providers that you trust and that helps you and aligns you with your business objectives.
Cool. Elena, you have anything to add to this one?
Yeah, I mean, I'd probably echo what Ben and Dan mentioned. I would focus on kind of the use cases, and that really brings things to like what problem are we solving at the financial institution, and then who do you typically go to partner to help, either technology, customer service, sales, and you kind of build your own little village, I'll call it, right? We all have our little villages of people we work with, and there's tons of resources out there at this point. I know from the clearinghouse perspective, we work really hard of trying to help, what do you need for a business case? What are the implementation steps, regardless of what provider you're going to go with, what use case you're going to go with, because real time can mean a lot of different things to different people depending on that use case. So just honing in on that and then leveraging the resources that are out there. There's checklists, there's guidelines, there's use cases, there's all of those things that come to light. So you're not alone, basically, at the end of the day, and all of our organizations can help navigate appropriately.
So when we talk about use cases, I think we've probably all been in enough conversations around this topic to know that there are kind of like the obvious use cases that get thrown out there around disbursements or around payroll or things like that, where you could see the clear value in automating or in speeding up the payment. But what are some other really compelling use cases for real time that maybe aren't as sort of top of mind for people, or that are kind of interesting or transformative to each of you? Ben, you want to go ahead? Yeah.
I was just going to mention one, and then Ben, feel free or interrupt me. It doesn't matter. So to me, transformative use cases is a bit in the eye of the beholder, right? Of what problem the end user is solving, because it could be, so payroll is a good one. We've talked about it for years, including with same day ACH, which has helped a lot. But even within that use case, you have a lot of scenarios where you're enabling businesses to make real-time funds available if they need to terminate an employee, or if they need to just, the gig economy needs to get paid today, right? Use cases that are live, say Grubhub drivers, they want to get paid today for the drives they did today, and they have the ability to do that depending on who they bank with, to get paid today through the RTP network. So for that Grubhub driver, I think that's pretty transformative within the payroll, right, use case. I think that the newer one that we're talking a lot about and we're seeing is on the merchant settlement side. And I think that's really important in today's world, with cash flow being really important for small businesses. The ability to access their cash for the goods they've already sold or for the services they've already sold. They now have the ability, in some cases, to receive their settlement for that activity in real time. People don't think that a daily change makes a difference, and in today's world, in my opinion, it does. So those are just two.
Yeah, Ben, go ahead.
Great. I've got two that come to mind that I'm kind of excited about. One is a little more techie, but that is, under the hood of RTP is this really rich messaging protocol based on ISO 20022. And there's contextual data that can be sent along with these payment instructions. So, could a request for payment actually embed the invoice within it? Like, there's really cool stuff we could do with this new kind of nomenclature or protocol. So that's just one interesting one I'll throw out there at a technical level. One that's a little more personal. So I live just north of Des Moines, and Des Moines is the city of insurance. And so this one is really germane. About 4 or 5 years ago, I was driving home from work and ended up hitting black ice, which I don't think they have much in Georgia, but in Iowa we have that. Ended up totaling my truck. I, of course, was fine. And so to get the payment for my truck took a long time, and then it took a long time for the check to clear. And we had another car. We're fine. But if you needed that payment sooner, there are probably better ways of doing it. So not waiting for a check to arrive or trying to cash at a bank, which may or may not be open at the time, like that is a really compelling one. Getting someone the funds they need after some incident. So those are two I just think that are really important because they both offer promise. One more on the hope side, when you lost something, the other in like, well, this is pretty rich. How can we do more using that protocol?
Yeah, go ahead, Dan.
I might add to Ben's notion of the RFP support and all the rich technology that can go there. One of the things we're starting to hear kind of fits in the bill pay space, but it's not the traditional, debit pull. I'm going to set up a recurring bill pay. It's more the small merchant showing up at, the bagel delivery guy that shows up at the coffee shop and they want cash on delivery to make that payment. Can an RFP go in one direction in the instant payment kind of thing? So there's a rich field of using the data and the bidirectional flow using the RFP and the payment to fulfill some bill pay needs. So that'd be one that I kind of would call out. It certainly helps with cash flow. The other is I mentioned the treasury use case, but Ben's use case hits home. I do live in the Southeast, right outside of Atlanta, and we're hearing about all the storms down on the Gulf Coast. There's a lot of disbursements, insurance. I think that's a big one for us as well.
Cool. So one question I have about that to poke a little bit. So, like I said, I used to work at Bank of America. It's actually been about 5.5 years now. But while I was still there, we did a pilot of disbursements, real-time insurance disbursements with Allstate using Zelle. And that was 5.5, 6 years ago. So we're still talking about disbursement use cases and how it would be nice because they would add so much value, which is 100% true. 100% agree with that. But like, what gets us over that hump to adoption, right? Like, it's not the lack of technology that's made that use case not like prevalent, right? There's some other dynamic there that's holding that use case back from just being like how we do disbursements for insurance. Any thoughts on that, or like how we get past hurdles on things like that?
So maybe I'll jump in and start. I think, and this kind of goes back to the earlier question about talking to the customers and talking to the industry about the difference in all the different forms of real-time payments. I think there's an education need. You've got to take the magic out of this. You got to take the voodoo out of what instant payments are for all of the users, the financial institutions that are going to support it, their clients, whether it be consumers or businesses, and make it real and make it simple, so that they can say, that's going to be easy, and it's going to be an easy replacement. Now that means a lot of technology that's going to have to back end that so that it can be as simple as we would say it would be. But I think that's achievable. I don't know that that's the hard get. It's the changing the perception of that's something new, that's full of risk, it's different, I've got to manage to it, it's a new project I've got to undertake. And I think we, the providers, have to meet the industry in the middle and make it easy for them to figure this out. And I know we've been out as actively as we can trying to drum up many conversations with the kind of providers that will do that, will help us meet the consumers and the businesses in the middle. So that's kind of where my mind goes on that one.
Thinking about this one theme that comes to mind is product simplification. So we have this API, which is great, and is really built for engineers and technical folks with which to integrate. Then we have a dashboard that helps. And so to solve this problem, you got to integrate with probably an ERP system. So you got to speak SAP in their IDOC format or their web services format, and how do we connect these networks and do it in a simplified way? And that's what we're all still working on that, whether that be components, whether that be adapters, whether it be bridges. So I think we need to continue to demonstrate these use cases being possible, but also solve them. And as a dad who gets payments for reimbursements for braces, and we get them via check, I don't really complain, but maybe I should, in a constructive way, to say we can do it better. But I also think once you go beyond this beautiful, let's say, API, and then you start talking to an ERP system, how do we make sure that we can simplify that? Because that's just a really hard problem. So I'm throwing a problem out, not a solution, but it's ripe, and I'm looking forward to attacking it.
No, you're Ben, you're spot on in the sense, and Dan, you brought it up too. Like it's very much the ecosystem. Sorry, the son keeps. I'm just the spotlight of the show is what it is. So it's you peel the onion and you realize how many components you're actually talking about when we're talking about one of these use cases. And when you talk about an end consumer or a business, what applications they have, security they have, different protocols to connect to different networks. And then on the other end, the same thing. You unravel the amount of systems that need to get upgraded. We just don't automatically, your iPhone overnight and it magically appears. So, my background's a bit in software and tech. And so you kind of, I go around a little bit thinking, how can technology providers the tech is there, like you said, Scott, at the beginning. How can the mass enablement, right, components of it be more successful? How can upgrades be more timely? How can just that ecosystem update so that we can take advantage of, the real time, I'll say, conversations that we need to have in commerce, the real time experiences people need to have in today's environment. I think we would all agree the payment is just one component of what entities want to do. Usually it's just a messy side of it. And that's what I think we need to focus on.
Yeah, I think highlighting the number of stakeholders, right, is a key part of that. And yeah, it's the ERP and it's the corporate and it's the end consumer and it's the network and it's all the tools, used to make it secure. And the alignment of all of those parties around things, each with slightly different drivers as to what creates value for them, right? Enough to where they're going to take on the effort or they're going to do the integration or whatever it may be. Seems like as an industry, that's the thing we're still trying to crack, right? We're still trying to get it aligned to where every stakeholder required has the right value proposition alignment and are willing to put in the effort to adopt. And I think we're getting there, but I think that's something as an industry we still are kind of working through. So that's kind of the angle from a use case like a disbursement or a push payment. But the title of this session is around commerce. So what if we think about it from the other side, right? How, if at all, do we see real-time payments impacting how consumers spend money as opposed to receiving money?
Well, I'll just start really quickly. In two aspects. One, I'll give just some stats because I was looking at a recent MasterCard study of small businesses in North America, and they say about 76% say the pandemic prompted them to be more digital, right? And 82% of them are changing how they send and receive payments. So just want to like the focus that we have now and the attention I think that we have on transforming commerce. When real-time payments and kind of the different use cases it unlocks from a send perspective, like how do you pay people? To us, it's not, you're not paying earlier. So the concept of money leaving earlier is not really it. It is on the schedule that you need it to be, and you manage your cash flow up until the time that you need it dispersed. Right, so you have more control of that transaction rather than having to pay a few days in advance to fund, and you needing to work with that liquidity a little differently. So to us, it's more the precision of the payment that unlocks on the payable side, right, of when it needs to leave the door, rather than managing, funding it 2 days in advance or freezing some assets in order to disperse those.
Other thoughts?
Maybe one thing I'd point to is, and maybe give a plug for the Faster Payments Council that's, I know, is actively working on something around QR codes, and this is a very nascent concept, but the idea would be, can we plug faster payment solutions into something as simple as a QR code on the front end and change the way that people interact with a buying decision or a payment decision? It could be at Ben's orthodontist, at the office. He can actually make a payment because there's a QR code that's available for him to Skype or swipe or something along those lines. Scan, I guess, would be the case. So I think there's some really novel ideas about how you can go about facilitating it. And then you get to the liquidity thing that Elena spoke to, and you get the reduction in friction as a result. It becomes painless and easy for someone to initiate that payment at the point of the payment starting. And I think that's a win. And touchless, digital, all the things that we're actively seeking come along with it.
I think Elena and Dan nailed it. There's two small points I would add. One is I think real-time offers another option. I do think consumers want options, and giving them more options should make them have a better experience. But the other is that other option, in this case, real-time, can be mutually beneficial. RTP is really the future of non-card transactions. And in this case, there's probably a better cost structure involved that could benefit the customer or the merchant. So those are the things that I see on top of what Elena and Dan said, which are very much aligned with my thoughts.
Yeah, I guess my feedback would be, and only because you guys opened the door, I didn't open it. But there's obviously another side to that argument, right? From a technology standpoint, facilitating a point of sale transaction using an RTP rail, not all that hard to do with a QR code or some mechanism like that. The idea of direct to bank or a bank payment, not unusual. But while the economics of that are better for a merchant, they're not necessarily better for a financial institution that earns the revenue from that today. So since the financial institutions are the ones, supporting the network and the kind of spread of the network, I think that's an interesting thing that we'll have to see how it evolves. That there has to be some sort of trade in value there beyond just the cost to make it make sense, I think, to gain adoption. Again, not so much from a consumer standpoint, but just in thinking about it from a whole ecosystem and all the stakeholders. I think that's still something in the US, at least, that there's some work to be done through. So I'll not go too deep into that one beyond that statement and pivot a little bit, because I want to make sure we have time to talk about one of the things I thought was most interesting out of all this, legislation and talk of legislation and stimulus money and all this stuff. The thing that caught my eye was the digital dollar concept, right? And I think here in the U.S., Dan, you probably have a much better perspective on this, certainly than me. But that was the first I've heard of a real, like, calling out in a semi-official way is a thing that we could explore or look at in the U.S. And so I'd love to just hear some perspective from you all as to thoughts on that. Like, do we think it's something that does take shape or hold? Do we think we need it? Do you think it's useful? Just general, again, more personal perspectives than necessarily trying to represent your organizations.
This one gets me fired up.
Dan, we'll go first.
Yeah, maybe I'll go first on this one. So, personal perspective, maybe the company line at the same time. So like many central banks around the world, I think, this topic is one that's front of mind for a lot of people. So the Fed is certainly exploring, and exploring might be too strong a word, analyzing and paying attention to the topic, as you would expect we should, and doing our homework to determine exactly what that means. I would maybe give two perspectives. I think it is a bit of the shiny new topic, and everyone wants to talk about it, so it becomes very popular. At the same time, I would point that we've been to this point in this presentation, we've been talking about real-time or instant payment solutions that can achieve many of the same objectives, and we ought to think about, do we have a bit of a beta and VHS solution going on here? And that, I'm showing my age when I.
You could have said Laserdisc.
We solve for this. Did I drop out?
You did there for a brief second, but you're good now.
Okay. Yeah, so I think we've just got to consider the side-by-side comparison and what the problem sets are we would solve for, and give the full runway to the industry expenditure and work that's going into these instant payment solutions to figure out if we've got a lot of the use cases solved, and then where are the gaps and what objectives would be solving with another solution. So I think it's a kind of a two-way thought process there.
And I can see you just overflowing with things to say. You're holding it all in right now, but
yeah. So one of our values is money equals data, in that when we facilitate the movement of funds, there's data involved. So I think we're partially the way there. Like, just hear me out. So when you have a phone, right, you kind of have general comfort if you have a landline phone, that you have the plain old telephone system called the POTS line, the copper pair. But I can assure you, I used to work at a phone company. The backhaul, it's all VoIP. It's the only way to save money at a phone company. So similarly here, while there's your fiat currency, at the end of the day, when we move ACH files or wire instructions or RTP messages, we're moving data. So I just am laying that foundation that I think some of this is already happening. Now, a couple of things here. Dan, I do want to give the Fed some serious credit. I think you're working with MIT and some research, and that makes me really happy. In particular, this stuff's got to be transparent and backed by science. And I'm going to kind of put on my security hat for a second. The digitization of money has to ensure that some security properties are preserved and verifiable: confidentiality, immutability, authorization, accounting. So you have cryptography, open standards. That's got to be done properly and done transparently. So I'm very happy to hear that. My only concern about that, aside from what you said, Dan, and that what's the problem we're trying to solve, is it going to be inclusive? I want to make sure that what we do is inclusive. So someone who's unbanked or may not be technically literate, can a digital dollar still help them? I think that's solvable, but that's my concern. I have other thoughts about the underlying data structure and performance, but I can leave those aside for now. I'll stop, but this is a fun one. I'm glad you brought this up, Scott.
Yeah, I don't have much to add, except for I kind of looking at it globally, right? Like what China, so obviously is very prominent in this, compared to Australia, for example, 2 weeks ago, that analyzed it and said they currently don't see a fit for it. They're going to continue to analyze it and evaluate. So you see such a divergent results after the analysis. In partly, as I read about it, it has to do with where is that country coming from? To Dan's point, what problem are we solving? Are they traditionally a emerging economy, a developing economy versus a mature market with maybe different issues from a digitalization perspective, that is already digitalizing, a lot of the transactions already. So it comes from that perspective. I've heard about it a lot because of, people moving away from cash, right? Because of COVID and thinking that digital currency is going to solve and we can become a cashless society. And I think we just need to separate out the tech and then the policy and the legal frameworks, that we have a lot of work to do. So that's my opinion.
Yeah, I think that's all good perspective. I think I love rooting it in this kind of correlation, or at least comparison to what we're doing with RTP, real-time payments more broadly, and saying like, what additional problems does it solve, right? Because I think like you kind of alluded to, Ben, like even money movement today is all numbers moving around anyway, right? It's not like anybody's driving truckloads of cash around as part of every transaction, right? And so all the systems that have been built to do reconciliation and the de novo accounts at other banks, like all that stuff built into ACH and how everything settles with existing mechanisms, like it's not all that different than just like changing the numbers on the account balances on either side, which is presumably what settlement looks like in some sort of digital currency form as well. I think it is more about is the level of effort to embed it into our financial system worth the additional value it would bring, right? Whenever that gets defined as to what that is. And I think, Elena, to your point, in emerging economies where there's not as much legacy infrastructure, it's a lot easier to say like, yeah, like look at all this value it can add by bringing these things that we don't already have. But when you've got Australia or the US or countries that have all this legacy infrastructure and processes and build, I think there's a really high bar there to say, what is it bringing that we can't solve with something we already have in market? I think probably the digitization of the consumer and their ability to spend digital is probably the part of it that attracts me more so than necessarily like that the currency is digital. It's more of the implied, like, well, you can't have a digital currency unless you have the ability to do digital identity to bind to spending that currency. I'm much more bullish on digital identity and the need for it, and then solving that problem necessarily than the currency itself is a meaningful answer. We got a couple more minutes. Last kind of closing thought. So this is not a fair like closing statement because it's way too grandiose. So you get to say it, but then don't have to defend it. So you can be super grandiose. And that's what do you see as kind of the single biggest problem in the U.S. payment system today? Which is intentionally super broad, doesn't have to be about RTP, but like as you think about what is the problem to solve in the payments industry in the U.S., like again, what do you think a quick version of that answer is? And Elena, once again, I'm going to go to you first.
I gotcha. That's good. And I think we've touched on it actually. So for me, and again, maybe because of my software background, today, change is a constant thing in banking and financial services, right? And we as an industry ecosystem don't do the best job at upgrading, making things relevant in today's society to meet the growing real-time commerce, real-time needs that we have. Forget payments for a second. So in our system, we have to bring so much baggage with us, and that is really hard to do. It's really hard to innovate, even responsible innovation. It's really hard to do. And I think that hinders a lot of our decisions, and it makes constraints on decisions that sometimes I wish we didn't have to, right? So that's my grandiose vision.
All right. Awesome. Ben, you want to go next?
Yeah, I'll go quick. I'll do an extension of Elena. That is, we have bureaucracy and everything else, but we need to defragment this scenario through simplifying the experience. That user customer experience has to be simple, secure, performant, all those things. We nail that, adoption will follow.
Awesome. Dan, and you close us out?
Yeah, it's going to sound like a little bit like a broken record, but I think it's a combination of complexity, So some of the things Elena raised, and then just general readiness. I think there's, we have a big complex financial services economy with a varying degree of readiness. And when you get down market, which are consumer facing, business facing providers, they're not as ready as we'd like. So I think that's one of the things. And then when you add that with the complexity, it becomes the seesaw effect that you've got a lack of readiness that gets complicated or gets multiplied by the complexity.
Awesome. Fully agree. Thank you all so much. It's been a great conversation. I appreciate you all being here. And that's it from us today. So thanks, everybody.
Thank you.
Thank you.